Have you ever done everything right in your trading? You followed your rules, you managed your risk, you stayed calm, you journaled every single trade, and yet somehow you still lost money. That was me, and I'll be honest with you, it nearly broke me. I remember staring at my account after another losing streak. I wasn't reckless, I wasn't emotional, I did everything the gurus told me to do. But the harder I tried, the more it felt like the market was laughing at me. And maybe you felt that same frustration too. Like no matter how much discipline you have, your results never match your effort. Now here's the truth that no one wants to admit. The problem wasn't my emotions. The problem was that my trading system itself was mathematically designed to fail. Let that sink in. I wasn't losing because I was weak or undisciplined. I was losing because I was playing a game where the odds were stacked against me from the very start. Think about it. If you sit down at a casino table and play long enough, the house always wins. Why? Because they built an edge into the game. And without one, you're nothing more than a gambler. That was my reality, and it might be yours right now too. But here's the good news. There's a way out. In this video, I'm going to show you the exact formula and mindset shift that separates gamblers from traders who actually build wealth. By the end, you'll know how to stop pushing a car with no engine and finally create a strategy that works for you, not against you. Stick with me. This could change everything. Section 1. The Hidden Trap. When I first started trading, I thought I had it all figured out. I opened my account, studied a few strategies, and within days, I caught some lucky winners. That early taste of success was intoxicating. I felt like I had discovered the secret path to financial freedom. And honestly, it made me reckless without even realizing it. Here's the trap. Those early wins are dangerous. They trick you into thinking you have an edge when, in reality, you're just flipping coins. And because you happen to land on heads a few times in a row, you believe the game is rigged in your favor. But it isn't. Think about how this plays out. You start adding size to your trades, you ignore risk rules because you know you're good at this, and slowly the market humbles you. The losses begin to pile up, and you feel blindsided. You tell yourself, I just need to control my emotions. I need more discipline. So you meditate, you journal, you read trading psychology books. And yet, nothing changes. That was me. I kept beating myself up for lacking discipline, when in reality, my strategy was never profitable to begin with. My system was like a beautifully painted car with no engine inside. No matter how hard I pushed, it was never going to take me anywhere. This is why so many traders quit, not because they can't handle their emotions, but because they never realize their system has no positive expectancy. In other words, the math of their approach guarantees losses over time. And here's the heartbreaking part. Most of them never even know it. They think they failed because they didn't have the right mindset, when the truth is their system was broken from day one. Now, here's where the hidden trap gets even worse. The trading industry feeds it. You're sold courses that focus on flashy entries, you're bombarded with strategies that promise quick wins, and you start to believe that if you just master the perfect entry, you'll become consistently profitable. But let me ask you, if entries alone could make you rich, why do over 80% of traders still lose money? The answer is simple, because an entry is just a moment in time. It's not a system, it's not an edge. And if you don't have an edge, every single win you get is just luck, and luck always runs out. The hidden trap is believing that trading success is about controlling your emotions or finding the perfect setup. The truth is, you could be the most disciplined person in the world and still lose, simply because your system is mathematically destined to fail. This was the realization that changed everything for me. It was painful, but it was also liberating.
Because once I understood the trap, I could finally stop blaming myself and start focusing on what actually matters. And that brings us to the next step, the formula that separates professionals from gamblers. The formula that can tell you in black and white whether your system is built to win or built to fail.
Section 2. The formula that changes everything. When I finally admitted to myself that my emotions weren't the real problem, I asked the question most traders never ask. How do I know if my system actually works? Not just on a lucky week, not just in a trending market, but over time, through the ups and downs, through the randomness of it all. That's when I discovered the formula that completely changed how I looked at trading. And don't worry, it's not complicated. In fact, it's so simple, you might be shocked you've never seen it before. Here it is. Your edge, your chance of long-term profitability, can be measured with one equation. Edge equals your win rate multiplied by your average win minus your loss rate multiplied by your average loss. Let's break that down in plain English. Your win rate is the percentage of trades you win. Your average win is how much you make on those winners. Your loss rate is the percentage of trades you lose. And your average loss is how much you give back when you're wrong. Sounds simple, right? But this one formula is the dividing line between traders who survive and traders who blow up. Here's a quick example. Imagine you win 50% of the time. That sounds fair, like flipping a coin. But now, let's say your average win is $200 and your average loss is $100. Plug that into the formula. Half the time you win $200, half the time you lose $100. Over 100 trades, you'll make $10,000 in gains and lose $5,000 in losses. Net profit? $5,000. That's a positive edge. That's a system worth trading. But now flip the numbers. Same 50% win rate, same coin flip, except your average win is $100 and your average loss is $200. Over 100 trades, you gain $5,000, but you lose $10,000. Net loss? $5,000. That's a negative edge, and no amount of discipline or mindset work will save you. This is why journaling and meditation didn't fix my trading, because you can't meditate your way out of a broken system. You can't discipline yourself into making a negative edge profitable. The math doesn't lie. And here's the crazy part. Most traders have never once calculated their expectancy. They trade blind, focusing on finding better entries, blaming their emotions for losses, when the truth is, they don't even know if their system has a mathematical chance of working. The professionals, they live and die by this formula. Prop firms demand it. Hedge funds track it. And retail traders? Most don't even know it exists. The moment I saw this formula in action, everything clicked. I realized my early wins weren't proof of skill, they were just random luck. And I realized why I always gave it all back in the end. My system had no edge. Here's the good news. Once you know this formula, you hold the flashlight in the fog. You can measure any strategy and instantly see whether it has the potential to make money over time or whether it's doomed to fail. And when I ran the numbers, I saw my system was broken. That hurt. But it was also empowering. Because once I knew the truth, I could finally stop wasting time on false hope. I could start building something real. And that brings us to the next big revelation. Why so many traders sabotage themselves by trading systems that don't match who they are.
Section 3. The Trader and the System. Once I understood the math behind Edge, I thought the hard part was over. I figured all I had to do was find a profitable formula and stick to it. But then I ran into another problem, one I didn't see coming. I realized my system didn't fit me. See, here's the thing. Most traders never think about. A trading system isn't just numbers on a spreadsheet.
It's a living process you have to execute in real time, day after day, trade after trade. And if that process doesn't align with your personality, your strengths, and your lifestyle, you will break it. Here's an example. I once tried a scalping strategy. On paper, it was beautiful. Small wins stacked up quickly. The math looked amazing. But in practice, it was a nightmare. I had to stare at the screen for hours waiting for setups. My heart raced every time I clicked the button. I felt chained to the charts. And even though the system worked for other traders, it drove me crazy. I couldn't stick with it. On the flip side, I know traders who thrive in that environment. They love the fast pace. They love making quick decisions. Their personalities align with scalping. For them, it works. Now let's flip the scenario. I tried swing trading, holding trades for days or weeks. It fit my personality better. But for someone else, that might feel unbearably slow. They might get anxious, watching trades float in profit and then retrace. They'd sabotage themselves by closing trades too early or moving stops. Do you see the pattern? The exact same system can be profitable for one trader and a disaster for another, not because of emotions, but because of identity. And this is where so many traders sabotage themselves without even realizing it. They copy strategies from social media, from a trading room, from some guru online. They try to force themselves into someone else's playbook. And then, when they can't follow the rules, they blame themselves. They say, I lack discipline. But the truth is, they're trying to live inside a strategy that fights who they are. Think of it like wearing shoes that don't fit. You can force your foot inside, but every step hurts. Eventually, you'll give up. It's not because you're weak, it's because the shoes were never made for you. That's why building a real edge isn't just about the math. It's also about alignment. Your system has to match your psychology, your time, and your risk tolerance. Otherwise, no matter how good the numbers look, you'll never execute it consistently enough to make it work. This was a huge breakthrough for me. It explained why I kept breaking my own rules. It wasn't because I was undisciplined. It was because I was trying to trade like someone I wasn't. Once I understood that, everything changed. I stopped chasing other people's strategies and started building one that fit me. And that's exactly what we'll talk about next. The three main ways you can build a real edge of your own.
Section 4. Paths to Building a Real Edge. By now, you know two things. First, without positive expectancy, no system will ever work. Second, even if the math looks good, the system has to fit who you are, or it will collapse under pressure. So the next question is obvious. How do you actually build an edge that's real, repeatable, and right for you? Through my journey and from studying professional traders, I've discovered there are really three main paths. And you don't need all three, but you do need at least one that you can commit to. The first path is observation. This is where you become obsessed with the market itself. You watch how price moves. You notice recurring patterns others ignore. Maybe you see how certain stocks behave at the open. Maybe you notice how currencies react around news events. Over time, you start to connect dots that aren't obvious to the average trader. It's not glamorous, it takes patience, but those who stick with it often uncover edges hidden in plain sight. The second path is experimentation. This is more scientific. Instead of staring at charts, you test hypotheses with data. You run back tests. You crunch numbers. You don't guess, you prove. You might say, if I enter here with this stop and this exit, what happens over 1,000 trades? And if the data shows positive expectancy, you know you have something real. This is the path many prop traders take. It removes emotion because the numbers don't lie.
The third path is reverse engineering. This is where you study what's already working for others. But instead of blindly copying, you dissect it. You ask, why does this system work? What's the underlying principle? Then you adapt it to your own style. It's like taking apart a machine to understand how it runs, then rebuilding your version of it. This way, you don't just mimic, you own the process. Now here's the beauty of these paths. They're not mutually exclusive. You might start by observing patterns, then test them with data, and finally refine by reverse engineering pieces from successful traders. But the key is this: you have to pick a lane and actually commit. Dabbling in 100 strategies will never give you consistency. Think of it like building a house. You can sketch your own blueprint. You can run structural tests to make sure it's strong. Or you can study houses that have stood for decades and learn their secrets. But you still have to pick a foundation and build. And here's the emotional truth. Most traders never do this. They chase signals. They copy room alerts. They buy courses with shiny setups. But they never build their own edge. And without that, they're just spinning their wheels, hoping for luck that never lasts. When I finally committed to building, not borrowing, that's when trading stopped feeling like gambling and started feeling like a profession. And in the next section, we'll dive into the part of trading almost everyone ignores, the one factor that can multiply your profits faster than any fancy entry ever could.
Section 5. The Exit Secret. When most traders talk about strategy, what do they obsess over? The entry, the exact candle pattern, the indicator crossover, the perfect moment to get in. And sure, entries matter, but here's the uncomfortable truth. Your exit matters far more than your entry ever will. I learned this lesson the hard way. I used to spend hours refining my entries. I'd backtest chart patterns, moving averages, momentum signals, thinking if I could just get in at the right time, I'd be set. But no matter how clean my entries looked, my account kept bleeding. Why? Because I had no plan for the exit. Think about it. Two traders can enter the exact same trade at the exact same time. One of them walks away with a huge profit. The other takes a painful loss. What's the difference? Not the entry. It's how and when they exit. Let me give you a simple example. Imagine you enter a stock at $50. Trader A takes profit at $55 and walks away with $5 per share. Trader B holds for $65 and earns $15 per share. Same entry, completely different result. Now imagine if Trader C panics and sells at $48. That's a loss. Again, same entry, but the outcome is night and day. This is why exits are the profit multiplier most traders ignore. Your exit defines your average win and your average loss. And remember that expectancy formula? Those two numbers, the size of your wins and losses, are what truly determine whether you have an edge. Here's the dangerous trap. If you focus only on entries, you end up cutting winners too early or letting losers run too far. You sabotage your edge without even realizing it. That's why so many traders say, I was up, but I gave it all back. It's not their emotions, it's their exit plan, or lack of one. Professionals understand this. They design exit rules just as carefully, sometimes even more carefully than entry rules. They ask, where will I take profit? Where will I cut losses? How do I maximize my winners while minimizing my losers? They don't leave it to gut feel in the heat of the moment. They systematize it. And here's the emotional kicker. When I finally focused on exits, my whole mindset changed. Suddenly, I didn't feel desperate for the perfect entry. I didn't panic when a trade went against me because I knew exactly where I was out. And I didn't feel the need to grab small wins because my system told me when to hold for more. Entries get you into the game. Exits decide whether you win. If you don't master this part, you're always going to feel like the market is one step ahead of you. So let me ask, are your exits multiplying your edge or destroying it? In the next section, we'll talk about how to take this even further,
how to build systems and safeguards that completely strip out emotion and make execution automatic.
Section 6. Removing emotion with systems. By now, we've exposed two big truths. First, your edge lives in the math. Second, your exits decide how that math plays out. But there's still one major problem traders face: executing consistently without letting fear or greed creep in. And let me be honest, this was my biggest struggle. I could design a system on paper, but when the trade was live, emotions took over. Suddenly, that stop loss looked too close, that target felt too far. I'd second guess, adjust mid-trade, and almost always regret it later. Sound familiar? That's when I realized something powerful. The pros don't rely on willpower. They don't sit there hoping they'll be disciplined enough to follow rules. They build systems that remove emotion from the process. Think about a pilot at 30,000 feet. Do you want them flying based on gut feelings or following a checklist? Exactly. Trading is no different. You need checklists, alerts, and protocols that guide your decisions automatically. Here's what that looks like in practice. Instead of staring at charts all day, you can set scanners to alert you only when your setup appears. That means no more chasing random trades. You only act when the system tells you to. You can preset stop losses and take profits so you're not tempted to move them mid-trade. You can use position sizing calculators that instantly tell you how many shares or contracts to trade, so you never risk more than your rules allow. You can even build mechanical systems that execute entries and exits for you, taking human error completely out of the equation. And no, you don't need to be a programmer to start. Even simple alerts and trade management tools can transform your discipline overnight. The key here is this: every decision you automate is one less opportunity for your emotions to sabotage you. Every system you put in place frees you from the exhausting cycle of overthinking and second-guessing. When I first built these safeguards, I was shocked at how much calmer I felt. I didn't need to sit in front of my screen for hours battling my own psychology. I trusted my system to do the heavy lifting. And when trades didn't work out, it didn't sting the same way because I knew I executed exactly as planned. That's the mindset shift most traders never make. They try to fight emotions with sheer willpower, but willpower runs out. Systems don't. Systems are what allow you to trade like a professional, day after day, without burning out. And here's the irony: when you stop obsessing over every decision, you actually gain more control because you're no longer reacting to noise. You're following a plan. So if you want to trade without fear, without doubt, without hesitation, don't try to kill your emotions. Build systems that make them irrelevant. And speaking of emotions, there's another trap that silently destroys traders: the lies our own memory tells us. In the next section, we'll expose how your brain can trick you into repeating mistakes and how data is the only antidote. Section 7. The memory trap. There's one more hidden enemy that sabotages traders every single day. It isn't the market. It isn't your broker. It isn't even fear or greed. It's your own memory. Now, that might sound strange, but let me explain. Human memory is biased. It's selective. And when it comes to trading, it lies to you all the time. Here's how it usually works. You remember the wins more vividly than the losses. That big green trade from last week feels fresh and exciting, but the 5 small losses leading up to it, they fade from memory. Your brain tricks you into thinking you're doing better than you really are. Or it works the other way. You take one painful loss and suddenly it overshadows everything else. You forget the months of steady growth, and you convince yourself you're failing. Either way, your memory distorts reality, and that distortion leads you to make bad decisions. This was me for years. I'd tell myself my strategy works, I just had bad luck this week. But when I finally looked at the raw numbers, the truth hit me hard. My system wasn't profitable. It never was. I only believed it was because my memory kept rewriting history. And here's the painful part. Most traders never escape this trap. They rely on feelings instead of facts. They trust their memory instead of their data. And because of that, they keep repeating the same mistakes over and over again. The solution? Data. Cold, hard, unemotional data. A trading journal. Detailed records of every trade, entry, exit, size, stop, profit or loss. When you track this consistently, you strip away the lies your brain tells you. Because the numbers don't care how you feel. The data doesn't play favorites. It shows you exactly what's working, what's failing, and what needs to change. The first time I reviewed a full month of my trading journal, it was like staring in the mirror for the first time. I couldn't deny it anymore. I wasn't losing because of emotions. I was losing because my system didn't have an edge. My memory had been protecting my ego, but the data revealed the truth. And here's the shift. Once you embrace the data, you no longer fear the truth. You stop guessing. You stop lying to yourself, and you start making real improvements because you finally know what's actually happening in your trading. That's why professional traders are obsessed with record keeping. Prop firms demand it. Hedge funds require it because they know the human mind is flawed, but the numbers never lie. So, here's my challenge to you. Stop trusting your memory. Stop telling yourself stories. Start tracking everything, because only when you face the truth can you build the kind of consistency you've been chasing all along. And in the next section, we'll take this idea even further, beyond data, beyond edge, into the higher level game that separates good traders from the ones who dominate.
Section 8. Playing the higher game. Up to this point, we've talked about building your edge, testing it, aligning it with who you are, and protecting it with systems and data. But here's the truth most traders never realize. Trading isn't just about the system you run. It's about knowing when that system will work best and when it won't. This is what I call playing the higher game. Think of it this way. Even the strongest edge has conditions where it thrives and conditions where it struggles. A trend-following strategy will print money in a strong bull run, but fall apart in choppy sideways markets. A mean reversion system might crush it when price is range-bound, but get destroyed when the market starts trending hard. Most traders never recognize this. They treat every day like the same playing field. They fire off setups in all conditions, wondering why results are so inconsistent. It's like a football coach running the same play no matter what defense is on the field. That's not strategy, that's stubbornness. Professionals see it differently. They study the meta game, the bigger picture of when their edge is likely to succeed and when it's better to step aside. They ask questions like, is volatility high or low? Are we trending or consolidating? Are we at the start of a cycle or the end? And based on those answers, they adapt. Sometimes they scale up risk when conditions are favorable. Other times, they step back entirely and wait. Here's the emotional shift. Retail traders think stepping aside is weakness. They feel like if they're not trading, they're missing out. But pros know patience is power. They understand that protecting capital during unfavorable conditions is just as important as pressing the gas when the odds are stacked in their favor. When I first learned this, it completely reframed how I looked at trading. I stopped forcing trades on slow, choppy days. I stopped blaming myself for losing discipline, when in reality, the market just wasn't giving me the right environment. And when the right conditions appeared, I was ready, mentally and financially, to take full advantage. This is the higher game. It's not just trading your system, it's knowing the battlefield you're on. It's recognizing when your edge has the upper hand and when the market holds all the cards. And it's having the humility to sit out when the game isn't yours to play. So if you've ever felt like your system works one week but fails the next,
This is why. It's not always you. Sometimes it's the environment. And the traders that last, the ones who actually build wealth, aren't the ones who fight the market every day. They're the ones who adapt. And that brings us to the final transformation, the stage where you stop chasing an edge and start becoming the edge itself.
Section 9. Becoming the edge. Up until now, we've talked about edge like it's something outside of you, something you discover, calculate, or build. And that's true in the beginning. But the final stage of trading mastery is when your edge stops being just a system you follow and starts becoming part of who you are. Let me explain. In the early days, trading feels mechanical. You're checking rules, you're second-guessing yourself, you're forcing discipline. It feels clunky, like driving a car for the first time, hands tight on the wheel, terrified of every turn. But after years of practice, something changes. You don't think about shifting gears anymore. You don't panic at every lane change. It becomes natural, automatic. That's what happens when you become the edge. The rules you once had to force now flow naturally. The systems you once had to check are second nature. You're no longer fighting yourself. You're aligned with your own strategy. Here's what that looks like in real trading. You stop jumping between strategies every month because you know exactly what fits you. You stop questioning every trade because you've tested your system enough to trust the math. You stop riding the emotional roller coaster because you know data, not feelings, drives the outcome. And the transformation goes even deeper. You start to think like a strategist, not just a trader. You adapt naturally when market conditions shift because you understand the higher game. You don't chase action for the sake of it. You wait for moments when your edge has the advantage. At this stage, the difference between you and the average trader is massive. The average trader is still searching, still copying, still fighting their own psychology. You? You're executing with clarity and confidence because your system isn't something you're forcing. It's something you've become. And here's the emotional truth. When you reach this level, trading stops feeling like gambling. It stops feeling like a fight. It feels calm, controlled, professional. You're not just someone who has an edge, you are the edge. That's why most traders never get here. They give up too soon. They keep blaming emotions instead of building alignment. But if you stick with it, if you build, refine, and trust the process, this stage is waiting for you. And in the final part of this video, we'll bring everything together. Because it's one thing to hear about edge, it's another to take your very first step toward building one that works for you.
Final section. Your edge awaits. We've come full circle. At the start of this journey, I asked you a simple question. Have you ever done everything right? Followed your rules, stayed disciplined, controlled your emotions, and still lost money? The answer for most traders is yes. And now you know why. It wasn't because you're weak. It wasn't because you lack discipline. It wasn't because you can't control fear or greed. The real reason is simple. You were trading without an edge. You were pushing a car with no engine. But today, we've torn back the curtain. You've seen the formula that separates gamblers from professionals. You've learned why your system has to fit you, not someone else. You've discovered the three paths to building a real edge: observation, experimentation, and reverse engineering. You've uncovered the secret power of exits and why they multiply results more than any entry ever could. You've seen how systems strip away emotion, how data defeats the lies of memory, and how playing the higher game puts you in control of when and how your edge thrives. And finally, you've seen what it looks like to become the edge, to reach that stage where trading no longer feels chaotic, but calm, where you no longer chase, but execute, where you stop being prey to the market and start playing like a predator. This is the path most traders never walk.
but you're here. You've listened, and that means you're already a step ahead. So here's your first step. Don't just watch this and move on. Take action. Journal your trades. Run the expectancy formula on your system. Look honestly at whether your edge is real. Because once you see the truth, you can finally start building something that lasts. And if this message resonated with you, I want you to know you're not alone. At MindLock Trading Psychology, this is exactly what we focus on. Helping traders like you break free from emotional traps and finally build systems that work. So if this video gave you clarity, share it with another trader who needs to hear the truth. Drop a comment below and tell me where you are in your journey. And don't forget to subscribe because we're just getting started. The next videos will go even deeper into the psychology, strategy, and systems that separate professionals from the 90% who quit. Your edge is out there. And when you build it, when you become it, you'll never look at trading the same way again. This is MindLock Trading Psychology, and your edge awaits.